The broadcast is now starting. All attendees are in listen-only mode.
Hi traders, welcome to the live webinar with Admiral Markets. My name is Chris, and we'll be focusing on strategy as always on Wednesdays. This time around, I want to discuss trading plans in general and why they are important, but I think most of us understand that already. More importantly, perhaps, is why I think that the plan is not the end point. We need to move beyond that, and I think be ready and flexible in how we respond to the market. So I'll discuss this with live examples looking at the market in just a minute. But first, two disclaimers. First one, explaining the fact that the live webinar with Admiral Markets may not be suitable for everyone. Therefore, please visit admiralmarketsglobal.com, select your country of residence, and contact an appropriate entity to find out if it is suitable for you. Second of all, please note that trading for exchange and global financial markets is considered high risk. Please seek the advice of an independent financial advisor for more information on that. This webinar is for informational and educational purposes only. By continuing watching this webinar, you agree with this disclaimer and you are aware of the risk involved when trading. All right, thank you for your attention on that. Before we kick off with the webinar and actually take a look at the charts, please take a look at admiralmarkets.com after this webinar for more info about how to trade, how to start trading, what kind of instruments you trade. As you can see here, the list is quite long and wide. A lot of different instruments that are available. And also platforms. Obviously, you hear it more often from Netta and myself. We talk about Supreme Edition plugin and how that could benefit your trading. So take a look at that link right here, and you'll get more info about all the good stuff from Supreme Edition, WebTrader, and of course the classical platforms. So just click on the find out more. There you go. All right. With that said, I want to take a look at the markets with you and address a little bit what I already mentioned is the topic of today's strategy webinar, which is being prepared, planning a trade plan, but then also being flexible with adjustments really. So with that I mean that obviously we need a trading plan because it's efficient. It makes us focus on setups that are hopefully better than other setups, right? That make us focus on uh, either a good high probability setup or maybe a better reward to risk, something that gives us an edge in general for the long term. Trading plan helps us focus that because without a trading plan, we might feel or become lost, right? We might reanalyze the chart from minute to minute, and that becomes tiring. That leads to decision fatigue, right? We would get tired of making yes, no entry decisions all the time, and we might start to make mistakes because of that. That's the problem. Trading plan is kind of a shortcut because it allows us to analyze the charts in a more efficient way, and we're then looking for certain signals and triggers that kind of confirm whether a setup is interesting or not, whether a chart is interesting or not. And this saves time and this saves mental space too for making those decisions. So trading plan is very important. As we've said before, other traders have said as well, that's not rocket science, but it's not the only thing. It's not the last thing. It's not the final step either. Once we have a trading plan, okay, that's great. We should work on that, improve it, implement it. But once we implement it, we are bound to bump into situations where the trading plan doesn't necessarily explain what we should do in every single case. So we're going to have to use, our judgment and assess what is best in these cases. So it's good to have a plan, but that plan is going to be kind of challenged in ways that we don't know how. We cannot kind of plan for every situation, for every scenario, because we'll be planning forever. We'll be planning and planning and planning, and we cannot account for all of that. So we're going to bump into. There are going to be things thrown at us, not physically but metaphorically, that we will need to deal with, and that is maybe not in our plan. That's logical because otherwise we would be planning forever, right? Um, and that doesn't lead anywhere. So we need to kind of make the best judgment we can with our plan, see if there's a worthwhile to take an entry or not. But then if we do take an entry, it's got to be prepared that sometimes things don't go as planned, right? And we got to be understand how to best make the judgment and make the decisions as info is coming along, as more candles appear on the chart. So that's why I think trade management is so important, because the entry is important too, but the management maybe even more so, because that is actually where we are able to cut the loss short or let the winners run, and that has a very big impact on our performance. All right, so many traders are looking for a perfect system, perfect plan, perfect entry, but then don't put enough maybe emphasis on the management, right? And although I think the plan is important and the entry is important too, I think the management is actually more important, because once we enter, it's still very important how we manage that. We can enter great, but if we manage poorly, it will still be a poor result on average. If we enter okayish, but we manage perfect, or not perfectly, but much better, the result will be better too. So starting point is important, but don't get too kind of fixated or too pinned down to the perfect entry, right? Because it's giving us kind of a false start, a false hope that is all we need, that's the only thing that's important. Let's take a look at an example of maybe this thinking. Like for instance, yesterday we were taking a look at euro dollar, right, and saying that a breakout to the upside could be a good bullish break of the triangle, right? And if it breaks bearishly, then there could be a bounce at S1. Well, that didn't seem likely at the time because already price was around here when we were looking at the breakout. So then I was saying, okay, we need a good 4-hour candle that is basically breaking above this resistance trend line. So that could be a good breakout candle and a good entry for a long setup, right? So what was the good breakout candle? Well, not this one. That did end up having a wick, but some might have traded it despite that. If you did trade that, it's one where I don't think it's right or wrong. I would probably not because of the wick. But the next one is a bullish candle clearly above the resistance trend line, and I think that would qualify and kind of confirm the breakout to the upside, right? So I think this is a good example of a candle that confirms the trading plan, right? And I don't think there's anything wrong with trading that. So taking an entry right there makes sense. Some traders might not do that because they think the entry is too high maybe, or there could be all kind of reasons, right? And it depends on your specific trading plan too. Of course, it's probably not the same as mine. But my point is that even if a trade is taken here, it is not to say that that's the end of the that is the last step that is important. No, management is very important. And you can see that even if the entry is maybe not fantastic up in here, you still have plenty of candles that push our way, plenty of time to manage the trade, move the trail stop loss to break even, move the trail stop loss below this candle, take profit at the R2, to defend yourself against any potential pullback to the downside. So yes, trading plan is important, entry is important, but it is primarily important so that we have an edge when we enter, that we save time when analyzing the charts, so that our trading plan kind of takes away many decisions and decreases decision fatigue, so that we're not too tired of analyzing the charts too often. And after that, all right, it's time to be flexible and to be prepared and to be responsive to what's going on. In my view, is better. All right, I read in a book last weekend that we humans tend to overemphasize the start and underemphasize the corrections after the start. So what we tend to do is, when launching a business, is we keep working on making a product perfect, rather than maybe launching an imperfect product and then improving it with the customer as we go along. Now, this is nowadays getting a little bit more popular and becoming a little bit more actually the standard process, but it was not so just a few years ago. And I think it's the same as for trading, right? If we're looking for the perfect entry, we might be waiting long, and we might be missing potential good setups. And it doesn't say that does not have to necessarily be that perfect setup we've been waiting for is actually going to be a good one as well. So this euro dollar in any case is doing well, has moved up more than 100 pips depending where the entry was taken, but let's say if even with this entry, it moved up 100 pips. So with the stop loss, as I said, below these lows, we're looking at a stop loss of about 90 pips. So 1-to-1 at this moment, not a bad trade. And it could go higher. It went up to 124, which was the first target we had in mind. Next target could be 125. And I think this is looking pretty good so far. I think that at this moment, a wave 4 is likely. There should be some bull flag. And if there is a bull flag on the outer chart, there could be a push and continuation higher towards that 125 round level and target. All right. So that's what we can expect, I think, for the moment on that euro dollar. And pretty good momentum at this moment. Strong, definitely strong. And after this flag here, let's see. One second. Sorry, this flag on the 4-hour chart. We've had good momentum 3 weeks ago or 2 weeks ago, and then we had a sideways triangle, and we're back in play, so into the upside. And this is something I mentioned in Monday's video too. Momentum sideways often leads to continuation. And that's what's happening again. And it's a pattern that repeats. It's a pattern that is reliable, and it's part of the DNA of the market. And you can see it unfolding yet again. And yeah, it's these patterns very, very useful. All right. So pound dollar, same thing. Talked about that yesterday as well. Said, all right, and Monday wave analysis, we're saying, or Tuesday wave analysis, saying that this is probably wave 1, 3, 1, 2, 3, that this is probably wave 4. Look at the engulfing twins on the hourly chart there, marking the end of wave 4 and the start of wave 5, and boom, up it went. Now, this went a little bit more than I thought. I was hoping for maybe 140.50, 141.50. It's all the way close to 142.50. This was definitely massive momentum, even more so than euro dollar. And we talked about, I have this fib on here, as you can see. If I remember correctly, we were talking maybe on the 50-minute chart that if it pulls back into this area, it could be a bounce spot, one more bounce spot for a wave 1, 2, 3, 4, 5. That was a little bit conservative, that wave count, because I think it's probably, this is the wave 3, not the wave 5, but it doesn't matter. It doesn't matter, right? Because whether it's a bullish wave 3 or a bullish wave 5, both are bullish. So there's confluence in that. And the only difference is perhaps is where you take profit or how much you let the trade run. There could be some difference in that. But in any case, the fib worked out. Price did bounce at this level, and it's been sweeping it to the upside here, reaching almost this minus 261.8 target here, way past the R3. It's a little bit crazy. If you have a TP, if you have a take profit, most likely you're out of that trade already, because who would expect this? But that's one advantage of using a trill stop loss. Sometimes you're lucky and price breaks through and just passes way more than you expect, and then with a trill you kind of are able to capitalize and ride those extra pips, which is great. So that's why often I myself do not use a take profit. I do have a take profit in mind, and I might add a take profit later on during the trade, but at the beginning of the trade I still leave it open, if you see what I mean. And then I manage that later on. Once again, trying to be flexible and adaptable to what's going on the ground, let's say, what's going on uh, as the chart develops. So if you did that, great. At this moment, I would, however, use a very tight trill, because obviously there's a chance of retracement with such a move up. So I would be probably trailing like hourly candle lows. I wouldn't even wait for fractals. I would literally trade trail stopping candle lows here at this moment on the hourly chart, maybe even 30-minute chart, eventually maybe even 15-minute chart, right? Maybe below this, really, really tight. Just letting it ride as much as it can, because look, if you look at the 15-minute chart, each of these candles, or almost each of these candles, have basically a higher low and higher high. So it's been a good rally, and that could be one trail. Other one could be to place some target. Obviously, if it moves up, it is possible to say, okay, now I will add a take profit because it's already at 142.50. That's it. I exit here. I'm not even using a trail. I don't want to give up any pips, and I'm exiting at 142.40, right? For instance, right? And that's it. So if it even goes higher, doesn't matter. You got those pips, you're out. Anyhow, looking forward, I think that here too, this is not a wave 5. This is probably a wave 3, and a big one, actually. So that's just confirming, I think, more potential upside. And so if there is a flag on the outer chart, there should be a continuation. I think we can put the fib from here to here. This is probably, as I said, this is the old wave 1, 2, 3, 4 we talked about yesterday. This is probably still wave 5, but within wave 5, we're probably having a wave 1, 2, 3, and there could be a flag for 4 and up for 5. So 141.70, 141.30 could be bouncing, even 141 could be bouncing spots for one move up to 143, maybe 144. It is quite impressive at the moment. That's my main thought for the moment regarding cable. Dollar yen broke this trend line. Let me take a look. We were analyzing yesterday at the double bottom. I said doesn't seem likely that price will bounce anymore, and it will probably just break this bottom. It didn't seem likely after the break of the triangle, and indeed it fell through lower. So we got a continuation lower, and price made it all the way to 109. 110 broke. So next target is 109. And I think that from this point of view, hang on. That it seems like price is on its way to challenge these bottoms right in here at this moment. All right, so now those are thick support levels, just as also we have thick resistance levels up in here, by the way. So price still playing within this kind of range, and from this point of view, there's still some space left, but ultimately there could be another bounce there. There is still some space left, right? So on a 1 hour chart, I think this is a wave three. Again, dollar weakness is making a wave three, wave one, two, wave three, flag, four, and continue five. Also on the dollar yen, seems like the same thing, fib from here to here, up to 110, 109.60, down to 108.50, perhaps 108. But then we are bumping into some confluence of support. All right, so those are the three major Forex pairs. Let's take a look. Thank you, Angel. I'm doing very well myself. Hope you too, and that your trading is going very well. Let's take a look at that XAU USD, which is right here. And it made it up to the R2. Well, well, well. Great stuff, Angel. I'm very happy for you specifically because I know that you were in a long. I don't know if you managed to manage and stay in to that target, of course. But if you did, great job. It did break eventually this channel. That happened with this. This candle was the breakout and did continue higher. Nice. Great job, Angel. So good. I think move from 1330 to 1353ish. $20 for you. I'm not sure. Maybe you're still in, but gold is now. I always was still looking at it as a bearish kind of potential for it to bounce. Wait, it's the wrong template. Hang on. But now, I don't know because it's really seriously testing this top. Today's candle will be very interesting. If today's candle closes like this, nope, my bearish move might not happen. But if today's candle disappears and boom, it's a big wick, that might be a serious sign that there is a big selling pressure there. Today's candle is still open, so who knows at this point? No one, I think. But you know at least what I'll be looking at. Today's candle could be important. If today's candle is kind of like somewhere in between, a little bit of wick, but not a massive wick, then I would say that is probably a better sign for bulls. All right. If it does break to the upside, then we might not get. I was thinking that this leg, and then this leg, we might not get this leg. I would have to reanalyze it in that case. I was thinking that this would happen, and we would have like three wave down, three wave up, three wave down, and then up. If that doesn't happen, I would have to reanalyze it. I if we do break here, then yeah, it could be a wave three, and it could just be the immediate start of immediate start of this bullish breakout. Momentum, correction, slow start, but then it could accelerate. So it's possible, and if that happens, then yes, bullishness on the gold is something that could be very interesting. Yes, even after it breaks, it could make a retracement, as Angel's saying indeed. And that's something that could happen. We'll have to see how price responds to the entire zone too. Today's daily candle very important indeed. Definitely. All right. So, does anyone have anything in mind that they would like to take a look at? I'm just scanning some pairs here quickly. Just trying to see if there's anything interesting. Let me know if there's a particular pair in mind that you would like to take a look at. Let's take a look at DAX, otherwise, in the meantime. There we go. Let me put on the other template right here. All right, there we go. Alrighty. A little bit of divergence between these tops on DAX, by the way. So this does not look like a wave 3 for the moment. It more looks like an ABC. And from that point of view, this looks like an ABC. Let me put a fib from here to here on DAX. Price did break above this top, but I'm leaning towards the fact that this could be more like a double top. The break was very small, and ABC, ABC, I don't know, but it doesn't look that bullish as at the moment. I wouldn't be surprised if there's an ABC lower. I might be too pessimistic on DAX. I don't know, but if today's candle is bearish, then that also doesn't look too good for bulls. So ultimately, I think the trend is obviously up. So after it might finish this correction, there could still be a bounce and continuation after a big kind of sideways zone. At this particular spot, you can see already price breaking through this kind of support trend line, this channel. So there could be a bigger retracement here, I think. Especially if this 4-hour candle closes this bearishly, I think that more downside pressure is likely at this point. We're seeing some momentum on a 15-minute chart. So if there's any flag on the 15-minute chart like this, then a continuation later this week lower, I think, is probable at this moment. Let's move on. Angel is asking about Euro New Zealand. Let's do that. There we go. Alrighty. It could be a wave 4 at this moment. Price did bounce with a pretty good weekly candle at the 38.2 fib. Price did make a slow, choppy downside. But at this moment, and bounced, as I said, bounced here, but didn't break above this resistance. For the moment, this is looking like it's a pullback for upside. So I would agree with you, Angel. I think it does look good for a bullish breakout above this trend line, or maybe on lower time frames, it could be a breakout above this trend line like this. That could be a good breakout there. And this does look like an ABC for more upside. So at this moment, I think we see 5 waves. 1, 2, 3, 4, 5. I see ABC. Pin bar at 61.8 fib. So this could be a bounce trade, perhaps. Bit more risky, less risky probably. Breakout candle here for upside, or a breakout candle here. Or a bounce at lower fibs. But for the moment, this is looking like a bounce, pullback, continue. 38.2 fib, slow downside, momentum to the trend to the upside, 5 waves up, 3 waves down. I would expect a bullish break. I agree. Alrighty. Let's see. Derek is asking about dollar CAD, dollar yen, and pound odd. I will quickly do a recap of dollar yen because we talked about it already. But basically, I'm expecting this to be on the hourly chart a wave 1, 2, 3. So I'm not sure when this wave 3 is finished, but as soon as it retraces, it could be the end of wave 3. There could be a wave 4. That retracement could be a bear flag or a triangle that could take price back to the 38 or 23.6 fib at 109.60 or 110. And I would look for a bounce there and a follow through to the downside to 108.60 and 108 and 107.50, which are minus 272 targets, minus fib targets, but also basically the bottoms on the left here. So you've got a pullback, continuation, I think, on the dollar yen. So far, good bearish momentum, so I think a good chance of follow through. And price could get to the bottom of this range right here. With regard to dollar CAD, it is, there we go, also broke to the downside. Could fall now to 122.50. At this moment, probably best to wait for a flag and continuation. That flag could basically retrace towards the 38 or 50 fib, 23.6 maybe even, and down it goes. That's what I would expect for the moment, one more time at least. And then pound odd. Yeah, this is getting now close to that main target, right? It stopped at the minus 272 target, continued to the minus 61.8 target. So I'm not sure how it's going to respond there for the moment. Let's take a look at the higher time frames. It might just be a pause because look, it's breaking above the daily chart moving averages. Moving averages are bullishly aligned. We had a deep retracement all the way back to the long-term moving average. Bounce, sideways, break. So from this point of view, there's only empty space to the upside for the moment, and good momentum. So yes, there's a good chance that price might make it to retest these tops here. So if today's daily candle is anything like it is today, if it closes like that, I think we can wait for, I think a retracement of today's candle tomorrow is possible. I don't think it will break below today's low. If once again today's candle is anything like it is now, as we see now, that but the candle is not closed as yet. So that would mean basically that any kind of retracement to the 38, 50 fib and continuation, I think, would be interesting. I'm not sure if it will retrace that deep, and if it does go back to 175.50, which is around indeed these fibs, is exactly in between those fibs actually, then that would look interesting. But that, yeah, we have to see how far first. A, how far does price move today? B, where does it close? If we have a good candle, then yes, retracement eventually, I think, is likely. In any case, would be needed, and any of these fibs could act as a bouncing spot. It depends also on how price makes a retracement to the downside. If it's a flag, for instance, then these two fibs are very likely. If it's a triangle, or if it's a flag, any of these three. If it's a triangle, then more likely these fibs. If it's a sideways movement like this, then it could stay above the 23.6 fib. Could be one of the most interesting ones for the moment. The pound odd I'm referring to, because let me check odd New Zealand very quickly. I'm not sure. I cannot see it. 1 second. Because odd is in a downtrend at this moment. So that's something to think about. In any case, if you're interested in getting these indicators like the Admiral Pivot Point, Admiral Keltner, the mini terminal, all of these are part of the MetaTrader Supreme Edition, and you can have a free download for MT4 or MT5. It is an extra special plugin developed by Admiral Markets with lots of features besides these few 60 plus features, and you can scroll down this page to see what's all included. The mini terminal, as I said already, is part of that, and we just passed that. And there are many other things. So take a look at that when after this webinar. Oh, there we go. Here you go. Here, mini terminal. But that's just part of it. You have as well this indicator package included too. So a lot of good things there. And besides, of course, these tools, feel free to sign up for more webinars tomorrow with Nennet and myself, and next week and the week after. And we'll be back, of course, with more of this material plus analysis if you want, analytics. Feel free to check that out. That's about it for today, I guess. Remember that trading plan is important. It is our starting spot, but it's not our end spot. Right? That's the main message of the webinar. What I wanted to focus on. So that's the same with regard to entry. Spend some good time on it to get the good entries, to develop good strategies, but then don't neglect kind of the closing of the trade. Don't neglect how important it is to you know adapt to what's going on and be prepared that sometimes we need to also kind of follow up with the trade after that. Now it depends on what kind of trade management style you have too. Some like to trade with a passive management. But if you're like me and you want to use the new info from the chart, use new candles, use new information that you get by looking and analyzing, then you'll probably want to do the same as me if you're the same kind of have the same vision as how I see it. But it really depends from trader to trader. Just the important message not to overemphasize the start. Let's say it's important to look at the entire um, process from A to Z. Alrighty, that's about it for today, I guess. We will see you hopefully soon. And once again, good trading. Cheers.